Welcome back to another episode of the Jordan Checker podcast where I'm joined by Danny Chiha. Danny has over 10 years business advisory and commercial accounting experience. He commenced his career with 4 years at Crowe Horwath, started his own successful business, then joined Coca-Cola Amatil as the financial accounting manager where he led a successful team of 17 professionals. Danny is the founding partner of Kelly+Partners Northern Beaches and also leads Kelly+Partners Startup. In today's episode with Danny, we're going to dive into a variety of topics ranging from how to legally minimize your tax, developing high-performing leaders, building a strong team culture, ensuring high performance within your business, how to structure your business the best way for you, how to price and position your product in the market in the best way to boost sales, and much, much more. But if you haven't already, please do subscribe on either Spotify, Apple Podcasts, or YouTube and enjoy the episode. What's, in your definition, kind of the difference between a boss and a leader?
I mean, there's heaps of memes online you can find to tell you this, but essentially the boss sits in the room and tells you what to do. The leader, grabs the ball and runs with you.
Yeah.
In its simplest form, it's that. I think it's what we build here is all about inspiration and trying to get, if the guys are here working late like they are tonight, I'll sit here with them and make sure that we don't leave, as opposed to just demand things. I refuse. I don't actually let anyone call me boss. So it probably gives you a bit of an insight there.
Yeah. So is it kind of like framing, just like that's how your approach, your mindset to kind of who you are within the room is a big part of the difference between what makes you a leader and a boss. It's not necessarily like you got the same sort of skill sets. It's more how you portray yourself.
I actually don't even reckon you have the same skill set. So I reckon, it's how you portray yourself, of course. But a lot of the business owners we work with or people we work with who are the boss, they rely on their title for authority and they don't actually have the skills to navigate it any other way. It's just I'm the boss, so do what I say. I'll give you another kind of example. Like at home, me and my wife will never say to the kids because I said so. So it's that mindset. It's like, just because you're in a place of power doesn't mean that your voice is the voice that everyone has to listen to. I don't think it's the same skills. I think they're two different skills, but it is a mindset to start with and then go develop the skills.
What do you think are some of the standouts that the leader has that the boss doesn't have then from a skill set point of view?
It's all people skills, like emotional intelligence. It's all people skills. It's all being able to, the reason why they go to I'm the boss is because they got no other tool in the toolbox. So, care about people, love your people, have that emotional intelligence to know what lever to pull or the, on which person, what's going to work. Do you need to push them harder or do you need to cuddle them more? And probably a little bit of humility as well. Like the reason I'm the leader in this role here, like part of it's obviously effort and work ethic and things like that, but a lot of it's just time. There's no reason why 20 of the guys or girls that are in the office here won't be running their own stuff one day. So I'm not any better than them or smarter than them or anything else. It's just I'm 10 or 20 years ahead of them.
So Zach, like you know exactly where they are today is a position that you were in when you were first starting out, when you were first, fresh out of uni or whatever path was, sort of taken there as well. And so that natural progression, the up the rank sort of thing is what, through that process, you're developing the skills that now you use as a leader.
Exactly. And you learn along the way what not to do from the people that were your leaders on the journey. And I'm in professional services. So, for the most part, I get looked after along that journey, whereas you can see why someone that comes up as a tradie who was an apprentice on site who, got made to do all the shit kicker jobs ends up treating their apprentice the same way. They don't get much of a different experience. So we are a product of our environment sometimes. And, I think it's our job as leaders to keep trying to learn and grow and develop the team underneath us. I think that's probably the last point that I'll say on it is one of the things about being the leader is your team can only grow to the extent that you can grow. So they have to have that idea that you're always out there learning, trying to better yourself to be able to pick the team up. I think when it does get to the point where if you're not growing as that leader, the team start to catch you in terms of their knowledge, experience, whatever. That's when they kind of lean on, I'm the boss, just listen to what I say because you got nothing else to lean on.
It starts to become a bit of a threatening situation when you're seeing everyone around you kind of close the gap between your skills and what they're coming through with. And then so you start, like you said, fall on the last course
The
that
last
you can. It's
resort,
like,
yeah.
I'm going to start to fucking just point fingers and tell people who I am, sort of thing, and that the chest puffs out.
Yeah, that's it. I'm
so-
the strongest guy here. Do what I said.
Yeah. Which, doesn't it's probably an old school way of doing it, and maybe it works in like I used to work in a warehouse, and that's probably the where it works, because you got some pretty lazy people and you got to be told what to do.
Yeah.
But in different settings, if that's not an issue, then obviously it's not necessary. So then, so let's say you're coming through with some new ideas, or new systems, new processes, whatever it might be. How do you ensure that people are getting on board with those sort of things, and listening as per se, but actually putting in the effort?
Yeah, it's funny. Like when we were a smaller team, we've recently implemented a new tool, and I actually had a bit of pushback from a couple of the younger guys here, and it was really frustrating. And on like kind of reflection, when I was working through what's going on, I realized, like, as a smaller team, when we were doing this kind of stuff and we were making changes, it was really easy. Everyone's in the same room, everyone's hearing the problem, everyone's on board to the solution, because they're all involved in kind of the discussion of how we're going to get there. The hardest thing now, as we're growing, is we're making decisions potentially up top sometimes that we need to implement across a team of 50 odd people. And the guy in team A versus team B decides he's not going to do it just because he doesn't see the reason or the vision. What I actually did in this scenario, I done two things. One, I brought the people in that were pushing back on it into the like champion squad. Okay. So made them more a part of the process to make them feel like they're kind of the solution. Like rather than pushing me back, help me find the solution. I gave them examples of things in the past that they love. So, they were talking about how they don't need this new process. And I was like, what about this tool? Do you like that tool? I was like, yeah, well, and I gave them the example of how that tool came about. But I also talked really openly in a team environment with everyone in the room about the need for innovation, the need to grow, the need for them getting on board to whatever it is that we're doing. And like not making it threatening about their jobs, not making it about, that particular process, just about the idea in general that we need to just build trust, back each other, and drive at things. They're there for a reason. The combination of those three things seem to work, but I think it's all about making them feel a part of the process. It was easy in the room of 5 because everyone felt a part of the process. It was hard in the room of 50 because you're not getting that same connection to it.
Yeah. So a lot of that then comes down to like the communication and how you're like, if you're first, you go to team A and you kind of talk to them about it. And obviously it's fresh. You're kind of, you're pumped up a little bit more about it as well. So you're really just nailing every point there is. By the time you get to team C, you kind of like half-ass it.
Do this,
you're putting a little less information. You're like, fucking hell, can we just hurry up?
Yeah.
And so then that's a part of difference. But, to your point of, you put them in a different team. Is that kind of to the scenario of the 5 people you surround yourself with, sort of thing? Is you kind of start to thrive off of those people that are the champions in that situation?
Yeah, exactly. Like took one person from each team, put them into a champions team, and make them work together on the solution. And then it came from bottom up. It comes from bottom up after that.
Yeah. Are you finding like that within those that in a situation like that you've kind of got some leaders within then an organization as well that you kind of then look for in the future to kind of maybe lean on for the next time this comes around, so you're just better at structuring who goes where as well?
Yeah, you've got natural people that people follow, so natural leaders, like not necessarily leaders in the sense where they're like inspirational and trying to drive, but they're just the kind of people that people listen to. And yeah, there's plenty of times where we'll walk into a meeting and I'll tap them on the shoulder and be like, hey, we're talking about this. I need, like, you go and you bring up an idea in a group of 20 people and it's just dead silence. There's 2 or 3 people where I'll be like, I need you to put your hand up and say something, like just have an opinion. It doesn't matter what it is, but that they'll start the conversation for you.
Yeah. The sheep follow sort of thing, isn't it? Like the whole scenario where humans are sheep.
We are. You just need someone to break the ice, and ideally it's someone with some influence. But you also got to recognize, like, we are dealing with humans, and there are like huge differences in different people's behaviors and care. So some people don't care about change; they're happy to jump on board and they just move to the next thing.
Yeah.
Other people, like, it's just they're so fearful of changing a process or whatnot. As I'm like, I used to be, I used to change everything all the time, just try and find better ways, and as I've gotten older, I'm starting to get a bit more stubborn in my ways. So I'm starting to be like, hang on, I'm turning into this guy that the people that I used to hate, I'm turning into. So you got to be careful.
Yeah. So then when you're in that meeting scenario, like, you say you lean on those two key people, I guess, to kind of continue to get the ball rolling. And there's some other things you're doing to kind of boost your meetings and get the most out of those as well. Because I noticed on your Instagram, you've done a couple of things where you've talked about, say, Jeff Bezos or something in some scenarios. And I'm not sure if you've listened to much of his sort of any podcasts. He's not done heaps, but I think it was on Lex Friedman, and he kind of talked about how for those people that are in a situation that they don't feel as confident to speak up, he kind of likes to almost lean on them as the first person to speak, because what that means is that then the next 10 people haven't made them a little bit afraid of their ideas, and maybe they're fresh to the table. Is that something, or some other strategies you might use yourself?
Yeah, I don't go that way. I probably should, but I don't go to the less speakers. When I need people to speak and give opinions in that scenario, I just go around the table and make everyone kind of speak as a breaking point. We start every meeting, at least our regular meetings, with good news, and we get everyone to go around the table and like just share their good news of the week, kind of thing.
Yeah.
And it obviously breaks the ice, builds rapport, gets everyone talking, and on the back of that, the meeting's just a lot more lively versus when we go straight into a meeting. We do a gratitude meeting every Friday, so something similar. But again, like the first time we did that, the first time I did it like 5 years ago, it's a room full of accountants, mate, staring at each other, waiting for the first, and like no one spoke. The second week, no one spoke, and then the next week, I sent an email. I'm like, guys, come with your gratitude, because we're going around the table from now on, and everyone's speaking. So
yeah, you've got something in there. I know it. Like,
yeah, like you got to thank someone for something, But now, like, it's one of the things that the team look forward to every week, and it brings them closer together. Like they talk about it all the time. So,
so is that a part of like some of those change things? Then it's just, once again, to your point of leaders, it takes time to build one. Some of those things, it just takes time.
It takes time. Like as I've gotten older, as the business has gotten bigger, realize how hard it is to implement change. When we were small, they talk about like, a small business being robust, and then the big business is like a big ship that's hard to turn.
Yeah.
When you're starting out, you don't appreciate what that really means. And then as we've gotten bigger, it's like, fuck, that's like, it's literally that.
It's
like,
true.
If I want to change anything, like this, I want to change the wording on an email. Before it took me 1 second. Now it takes me 5 years to get everyone to agree to that new wording.
Yeah.
Makes sense. Like, that just builds and things get slower, and we're constantly trying to break that down, and it is hard. It's challenging. But it's good.
So when the business is thinner, you can be the one to be like, just this is how we're going to do it. You don't have to, because maybe at the time that was a direct, had a direct correlation to what you were doing. Whereas now, like if you say, I want to change this, there's like 10 other people that it kind of affects before it would actually get to you as well.
100%. It's exactly that. It's like they're doing BASs, for example, for clients, like business activity statements. Like the last time I done the BAS was 5 years ago. So when I turn around and change the BAS process, they're all just giving me the finger. But they're also not hearing the conversations about why we're changing it either. So going back to when we're small, the problem would be very loud. We'd be saying, this is annoying. We need to fix this process. They're in the room hearing that conversation. Now they might hear their version of the conversation, but they're not hearing all the conversations that are happening that get to that point. So that
comes back to your point of the communication with like team A versus B versus by the time you get to C or something like that as well.
Yeah. And trying to get them all in early, like get the ground up guys in early and get it coming from the bottom up. Like, this is what we're doing. This is why we're doing. We're talking about process as well. It can be anything, mate. It can be anything that's going on in the business. Could be we're organising the Christmas party, and
it's probably the worst of them all.
yeah. Everyone's got an opinion.
Yeah. So then, like the concept of obviously, so now you're running. So you got around 50 staff. Do you the whole idea of running a business and a team like a sports team? Do you kind of see it like that a little bit, like understanding that not necessarily like offense, defense, and all those sort of contexts, or it might be, but in the if someone's not playing their role within the team, like you can't just keep someone there for the sake of it, like because it's letting everyone else down.
Yeah, we talk about like we definitely run it that way, at least in our office. So I won't say that's a whole Kelly+Partners thing. I've got a sporting background, so it's kind of all I've ever known growing up, and
I
so
can tell by the backgrounds.
yeah. So like, and a lot of the guys here are similar, and the girls here are similar. We actually found to just a bit to digress a bit, um, hiring people that had like semi-professional sports experience that didn't quite make it but tried really hard to get there were kind of great people that fell into the business for us.
Yeah.
Because they're resilient, they've dealt with that feedback, they understand exactly what you just said there, like the cutthroatness of a sport environment, and they never want to be that person on a team that lets other people down.
Yeah.
But yeah, to kind of in short, we definitely have that language of offense, defense. Defense being the thing like the documentation and the things we do every day that doesn't let us lose a client. Offense being the great stuff like the innovation and the new process that allow us to deliver better customer service every day. But we have that language. We like yesterday I was explaining to them like there's some stuff that's not getting done as fast as it needs to get done, and the way I explain it is, if you're playing football and we're dropping the ball every second set of six, like we just can't win the game. It's impossible to win the game if we drop the ball. If our completion rate's not high enough, we can't win. So we definitely tie that sports language into what we do, and then push the idea of high performance. Like the mission we're on essentially right now that we explain to the team is we're here trying to build a championship team to hang out banners from the rafters of the house, of the office. So like they've got the idea in their head every day that everything we're doing is about winning championships. It's not going to work. It's not just being an okay accountant. It's like, how do we be the greatest accounting firm that exists? And how do I contribute as a team member in that team to be that? Like, what does it mean to be a championship player that gets his jersey retired versus being, the guy that's on the team that is just there, because he's filling numbers kind of thing.
Yeah. You're not looking to be the local team. You're looking to be the Lakers or something like that. Like it's
literally.
Yeah. So how do you then, like, I imagine that leans into, your culture and things like that as well. And that's building that everyone's got the same sort of mission and values. So then when someone's, goes astray, you don't have to like personally attack them. You can kind of be like, hey, this is our values, our mission and whatever. Is that a strategy you're kind of tying into when someone is kind of, they're looking at like they're about to become sitting on the bench or something like that. You can be like, hey, like, remember, this is what we said. We wanted to win the championship, rather than being like, you're not doing well.
Yeah. So we build a visual representation of our Kelly+Partners Northern Beaches house. It's like our symbol of all the things we represent. Inside that are all like the things that matter to the team. As an example, like accountability, or we're in the trenches together. Like we have our symbols for that. There's about 11 things on there that represent what matters to us.
Yep.
Winners win, like things that we kind of are the language of the sports team, but also the business. The cement that they're the bricks of the house. The cement that holds the house together are our, like what we call our NTRs, our no talent required things. So, no talent required things, like for the All Blacks, I think is like everyone sweeps the sheds. So we have our own versions of that. Like our timesheets every day are our version of everyone sweeps the sheds. Our, make sure your calendar's done. They're the things that doesn't matter whether you're good at your job or you're bad at your job. There's these 5 things that if you do every day, we're going to be well on the way to winning. And then, so it's the combination of those bricks and that cement, those NTRs that we use to hold each other accountable on, because you're not attacking the person, you're talking to the symbol that we've agreed that, represents where we're going.
Do you find that helps then, like on, say, like not necessarily even you delivering that news to someone else? Now it makes it a lot easier for team members to say it to each other as well, because, now they can still go for a coffee on lunch break and go for a drink on a Friday night because they didn't personally attack each other during the week. It's
exactly what we talk about. It's like, it's not my job to hold them accountable. It's their job. And every great team that ever won anything has that. It can't be the coach and the captain yelling at everyone. It has to be the youngest player has to be able to talk to the oldest player and say, that's not what we do here. Not everyone. And again, like the guys with the sporting background, the girls with the sporting background are going to naturally be okay with that. And it's easier. Yeah. A lot of the other guys, we're in accounting, we're in professional services. So we're still going to be delicate, and we've still got people that aren't going to be okay with just, getting called out in front of people or calling other people out in front of people is hard for people to deal with. So we work really hard at, one of our bricks on the house is feedback is a gift. So to keep the idea in people's heads that we're always trying to grow each other and we're telling each other to be better at something because we want the best for them.
Yeah.
But part of it is teaching how do we deliver that feedback in a respectful way that doesn't make people feel like you're criticizing them.
Yeah. How are you trying? So the people that haven't come from the sports backgrounds, how are you trying to instill that awareness of, what's going on when that feedback is coming through, or trying to teach them how to deliver that feedback in the right way, because maybe their background is kind of like doing the more personal sort of thing?
Yeah. I don't have a science answer to I just spend a lot of time with them. Like I know the more at least personally, like I'll know the more sensitive people. So I'll call it out, and like I'll call them after on the phone. I'll be like, hey, I know I could tell that got to you, like understand this, and just give them the time to, at least give them the explanation of what you see. I'm sure there's better answers to that from better people, but very much a cuddles and hugs approach with a lot of people where they're not used to feedback, and that is like get the feedback or see them explain what's happening in front of them and make sure you talk it through with them as call it like a video review process versus the actual live game feedback, if that makes sense. It's challenging.
Yep. And how so when it comes to like high performance and you're wanting to build a championship team, that rich versus like poor mindset, is that something you're trying to like instill within your team as well as kind of just in the business world in general with how you're working with your clients and things like that?
When you say like rich versus poor, you're like proactive versus, or like positive versus negative kind of mindset.
Yeah. I think you've talked about before, like obviously it's not necessarily just a financial thing. Like a lot of people can say you can still have a rich mindset and have $0 in your bank account, or like poor as a mindset sort of thing.
Yeah. So I never talk about it in dollars. So yes, I try not to anyway. It's definitely an idea of like positivity versus negativity, glass half full versus glass half empty. We just lead everything with positivity. My number one trait's positivity, so it's pretty. It's natural for me to just walk into a room and try and pick everything up. Again, I don't think it's something that we scientifically teach. I think it's a bit of a show business thing. It's actually one of the things on our house. Like get pumped up around. We want everyone to come into the office every day with a bit of energy and to tackle things with a bit of a can-do attitude. Versus this is too hard, I don't know how to do this. Like we squash all that language and behavior early. I had one of the boys yesterday actually talking. Like it's simple as this. Is like, I'm like, oh, is that job going to go out? It's like, oh, as long as I've done it right, it's going to go out. I'm like, what do you mean as long as you've done it right? Like I'll squash that language fast. Like we're not talking like that. Like it's your job to make sure you get it right every time. It's like, oh but so I don't want to hear the explanation. Make sure it's right and get it done.
So it's like how you're talking to yourself as well as a massive 100%.
Impact. Like your language matters, man, and it builds your own confidence and your own self-esteem, and it will flow through.
I think and it's a lot of people. That whole idea of how you talk to yourself, I guess it probably comes under that kind of like manifesting a little bit of the person you're wanting to become and portray to the world. But like, so it can come across very like woo-woo, I guess, kind of in that case. But like, how many of like, you've got Michael Jordan poster on the wall behind you sort of thing. Like those guys, like you look back at, say, the videos of them, like they are just talking to themselves the whole time, reaffirming who they are, reaffirming what they're about to go and do. And it's like, if you don't have the belief in yourself, how can you expect anyone else to have the belief in you in the first place? Whether that's from trying to make the team or get hired or whatever it is, you go into an interview and you cuddle yourself up because you don't back yourself. It's just so important. And like, it's not some woo-woo topic, and it really 100%. Makes an impact.
Like there's obviously a line, like I completely agree with exactly the comment I said yesterday to this guy. It was essentially on the back of that first comment was, how do you expect one of the boys here to pass the ball to you if you're sitting there going, oh, I don't know if I can catch it or not? We need you to be confident. If you don't think you can catch it, we need to be like, come in here at 5 a.m. and let's train up so we feel like we can catch it. But separate to that, like there's a fine line that goes the other way, which is probably where you got to be careful, where it's like, you're overconfident, over-promising, over-delivering, and not delivering. So, another one of our values here is do what you say. So, so anything we are going to promise, deliver, or do, we make sure we commit to it. So don't be scared of the accountability. But if you say it, we're doing it. We're not half doing it. We're not sort of doing it. Like it has to get done.
Yeah, there's some form of, you got to be careful with the word as well, but some form of reality to the situation. Like it's now someone's reality to what they're capable of may be different to someone else's reality, and obviously, so that's a conversation in itself. Like it's, like how many times, I'm sure you've probably heard it as well yourself, and everyone goes, being told, oh, just be realistic. It's like, that's a kick in the guts, and you're going to break that. But if you can understand, like, all right, well, this is actually what I'm going to be able to put out, and maybe that is changing the time frame of that goal. Maybe it's not realistic to become the championship team in one day, but hey, let's say we're going to become the championship team in 10 years. Well, now we've framed a bit more of a realistic but still a big goal.
That's it. What's the game plan is probably the way we look at that. Like, that's the goal. What's the game plan? How are we actually getting there? Break it down into actions, break it down into day-to-days.
Now, so more kind of shifting towards, the inner workings of a business, I guess now, like away from the leadership sort of thing, in terms of structuring a business, let's say someone's like, their early days, they're kind of like, why would someone go sole trader versus company versus, trust, all these other options that they have out there? What are some of the differences and why someone would choose one over the other?
Yeah. So sole trader they go to because it's cheap, and they don't understand anything else. And like you can literally register online in 15 minutes, and it's the fastest way to do it. That's all good. Like if depending what you're doing, if you're not signing leases and employing people, you're the local carpenter or something, or you're writing a podcast and getting your first advertising. It's fine. Like you can set up as a sole trader and you can start that way. The reason why you don't want to live as a sole trader long term is your tax ends up being 50% or 47% once you earn over 180 grand, which obviously doesn't sound good to anyone.
No.
And you wear all the liability of the business. So if you sign a lease and you want to get out of that lease, or if something happens in the business and you're getting sued, it's not the business getting sued, it's you as a person getting sued. So you're liable for anything that happens within that business, which obviously, again, as the business grows and gets more complex, that becomes an issue. So that's sole trader. The next thing that most people do from sole trader is they go into partnership. So they'll go find a mate and say, let's find the cheapest way to start. And they'll do that as a partnership. And it's a very similar combo. It's like, it's all well and good. It's cheap, easy, achieves what you need to achieve to get started. But now, same story. If we make money, we pay tax on everything we make in our own name. It gets split by two people, but same consequence. Everything over 180 grand, we lose 47% of. And we are completely liable to both people's problems in the business. So, something goes wrong, we get sued for 100 grand. Partner A doesn't have any money. Partner B is liable for the whole 100 grand, not just 50 grand. So, So
stitch your mate up.
Stitch your mate up. And everyone goes into business with the best intentions, but 90% of the time, there's always something that comes up that you need to resolve. So, we try and avoid, like, their early day combos. It's potentially a lot of people start there, but by the time we're talking to them, they're generally moving away from those into either a company or a trust. The specifics of why you'd get into a company or a trust are pretty detailed. Like, there's specific circumstances to pick either one. I'll give you a quick high level on the two of them. Like, company benefits are tax is capped at 25%, and all risk, outside of some illegal stuff and not paying your super and stuff, most risk sits inside the company. So if something goes wrong with inside the company, we want to, it doesn't work out, we want to shut down the business, we shut down the company, and we don't lose our personal assets necessarily. So that's obviously attractive as we get more complicated, and keeping tax at 25% is obviously attractive. But the hard thing that people try and get their head around there is understanding that the company's money is the company's money, not their money. And we have to manage the flow of money out of the company in a tax effective way. They can't just take it all themselves.
Otherwise, that defeats the whole purpose of it being, well, not the whole purpose, but from a tax point of view, you've defeated the purpose.
Yeah, that's it. If you turn around and take it all, you've defeated the tax benefits.
Yeah.
And you can still get it out. It's not to say you can't get it out. You've just got to plan around how you're going to get it out. It's not just as simple as take all the money. Otherwise, yeah, we just pay the same tax. Trust is very similar to a degree, like in terms of its own corporate entity. From a tax perspective, it doesn't actually pay tax. The trust distributes to the beneficiaries. So who in the family do I want to pay the tax? Am I going to give it to mum, dad, brother, sister? There's rules around that. The money has to flow. There's some regulations, but the idea is that we're able to spread the profits around.
Yep.
And in a unit trust scenario, it's similar to a company. You can just share to the people that it relates to. The major benefit from a company is often that the reason why we're set up in the trust is when you sell the business at some point, you get a 50% discount on the asset sale. Companies don't get that. Individuals do, trusts do, but not companies. So,
okay. Yep.
It gets complicated on the scenario of why we'd go one way or the other. But I think the point is you don't want to live as a sole trader or partnership for too long. You want to move into a structure that makes sense. There's a bigger conversation than that because you combine structures. But overarchingly, you got to get into something that stops you from paying 50% tax and protects your assets.
No, nobody wants that. So is that like, so from, let's say like, some of the bigger companies, especially as well, like, company A, or let's call it like the group at the top, and then they have 4 companies underneath them. Is that kind of why the company is really important as well? Because they got 4 businesses within the one company. And therefore, if, business A goes to shit, it's not going to impact business B.
Yeah, so they have 4 businesses within one group, but I'd imagine they're 5 different companies in that scenario.
Okay, yeah.
Company 1 up the top holding the 4 other companies. And then, you're spot on. Like if a problem happens in company A, assuming there's no loans and that going across to other entities, company A gets closed down, company B continues. You see that kind of structure often where you've got like multiple restaurants or something, like different locations signing different leases. You kind of hold that lease in that entity, hold the next lease, so you can, if something doesn't work, you can kill it without killing everything.
Yep. And then so in terms of, say, a lot of people are going to want to claim a car on business expenses and things like that. How to what extent can someone actually do that? A recent conversation with somebody, they don't own their car at all. It's kind of all their cars are set up within either a trust or a company. How does someone operate that? Are there different things, rules and guidelines on the type of car and things like that as well?
Yeah, like without getting into absolute detail, like the reality is you can claim the car to the extent that it's used for business. What that means is, where's your logbook? How many, like you have to keep a 12-week logbook. What percentage of that 12 weeks do you use it for business? Then you can put that car in your business and you can claim it. There are some, there's more details than that. Like there's a maximum you can claim, which is 50, I think it's 58,000 now, maybe a little bit more. But basically, if you spend $100,000 on the car and it's 100% business use, you can still only claim the $58,000.
Yeah, okay.
So there's some limits on what you can claim. It's a pretty low limit if you ask me. Like it hasn't moved for a long time and I think it needs to move.
There's not many cars, brand new cars over that kind of 50 range anymore, is there? Like,
exactly. The number's moving. You'll find that a lot of people have utes and vans and things like that. So utes that can carry more than a ton, vans, utility cars, they don't have that limit issue. They can be claimed to their full amount. So you'll see if, that's why Australia probably has a large number of those driving on the road.
Yeah.
And then they've recently brought out something similar with electric cars, where if you buy, I think it's either 80 grand or 85 grand. If you buy an electric car under that price, basically you can claim 100% of it without having a logbook. So there's some details in there, but if you go with the idea that when I do have a business, there's probably a lot more things I can claim in the business that I don't claim when I don't have that business, just because you are genuinely spending a lot of, like I spend so much money in this office. And I'm on the road every day seeing people. Like you are using your money to invest in that business, and it is meant to be that you are meant to get that benefit for it. But so take the view that if it's for business use and you've got the documentation for it, it should be going through the business. You should be claiming it, and you're essentially getting it 35% cheaper.
Yeah. What are some things then, you mentioned obviously you have a lot of expenses on a day-to-day basis. Are there some common things that your team is seeing that, people are missing when it comes to trying to reduce tax, understanding that obviously tax is a part of the system. We're not going to obviously remove that, unfortunately, but, so we've set up our company, that's 25% tax. So we've reduced our that from, our business just making money as a sole trader. What are some other common things there?
I don't think it's like I'll never get into a list of like, hey, there's the three things, because it's everyone's got different scenarios. But I think the biggest thing that we find with tax, it's more about being organized. So what you'll find is the less organized you are, the more tax you end up paying. The less you think about tax, pre-June 30 versus post-June 30, the more tax you end up paying.
We've all been there before.
Yeah, exactly. So if I'm gonna talk to anyone about tax and minimizing tax, it's like get the right structure, which is what you kind of touched on there. Like you've got the right structure, and then make sure we're speaking pre-June 30 to review accounts, see what's in there. If we have to pay super, don't pay super, prepay this, don't pay this, buy this, don't buy that, and have those convos. Because it's really easy to play with timing and get things right. Again, without going into specifics on people and their own stuff, what I would say is make sure you got someone that's looking in the detail, again, pre-June 30 every year to see if there's things that are getting missed and making sure we're picking it up. But it's not, as you rightly said, like the tax is a part of the game. It's our job to keep it, down as much as possible within the legal limits of it. But a lot of that is just being prepared and being organized and making sure we are taking advantage of all the things we can take advantage of. Once we've done that, it's more about, here's the calendar. This is when you're going to have to pay this tax. Make sure you put in the money aside. Don't let it be the thing that drowns you. Because often it is for people. Yep.
Yeah, they come to the end of the year and the check's a bit bigger than they maybe expected as well.
And that's the biggest, one of the biggest transitions for people when they're starting their own business is, as an employee, you didn't have to think about, the only thing you thought about tax was your refund. Whereas once you start running your own business, you're constantly paying the ATO. Like every month, every quarter, you're paying the ATO money, you're paying super money. Every year, you're paying obviously the tax return. There's just always money going out the door to the government. So it can very quickly drown you.
So then, companies, people will go nuts constantly about your Woolworths doesn't pay tax and Qantas doesn't pay tax and all these sort of things as well. Obviously, they're, as Australian-based companies, they're paying tax, but to what extent does a larger company, the bigger you get, does that come with some ability to kind of reduce tax a little bit more, or are they more sort of like taking a loss one year and then paying it off eventually anyway? So, you notice in the media, they go rife and go nuts one year, and then the next year they don't seem to care about Woolies tax.
Yeah. I think that's that. I think it's the second thing. It's like they're investing a lot of the money and spending a lot of money. Like they do get scrutinized heavily. ATO are all over this stuff. They got internal tax teams. They're going to minimize their tax as much as possible. Yeah. A lot of the online businesses are using international setups to get around some of the tax, but the ATO have cracked down on that heavily. It's often they've spent a lot of money, and like rightfully or wrongfully, you want something like Google to have more cash to be able to invest in better services to push the world forward. They should pay tax in the countries that they make money and what they do. But at the end of the day, a lot of these companies are spending a lot of money in growing, technology, like what they do at Tesla, or what Elon Musk did to leave PayPal to go start 3-4 companies that are revolutionary. And like, I don't have the stomach to do that. You can have my tax dollars and go spend it on growing something. Like, I'm never gonna build what he's building. So sometimes some of these guys do get these tax breaks, or they play the system a little bit harder. But at the same time, a lot of these businesses are spending a lot of money in growing a lot of stuff, and they're owned by a lot of the shareholders of these businesses are families around the country. So when Qantas pays out a dividend from the extra profit or cash that it does have, it goes to the mums and dads of the country.
And the chances are they probably don't realise that may be involved in their super without them understanding that anyway.
Them knowing. So I'm not at all saying that these guys all pay their fair share of tax. I'm sure that there's ways that they're kind of getting around some stuff. I guess what I'm saying is there's probably some counter arguments to what the right number of tax they should pay. And I think a lot of the stuff is they spend a lot of money and yeah, like you said, they lose some years, they win some years. You know, keep pushing the world
And I
forward.
think that people have a huge misunderstanding also of, like you said, the benefit that those companies still provide. Like you said, whether there's some shady stuff and that it's not perfect either. Look how many jobs they produce, you know, like it's, you know, and we forget that then is it 6% payroll tax on top of other things as well? Like once you're over like, you know, $500,000 or $600,000 a year or something like that, like it's the bigger you grow, the almost more you get punished anyway, despite the fact that you've just given people jobs. It's like, it doesn't really make sense, but you know.
Payroll tax is the bane of most people. Like imagine me telling a client who's, you know, worked so hard to grow his business, finally opens his second or third location.
Yeah.
After taking all the risk for 10 years, hasn't seen his family, blood, sweat, and tears. Like, oh, by the way, now that you've employed that 21st person,
Yeah.
all the wages from now on, you have to pay an extra 5%
Yeah.
tax on. It's like, they like, it's the most hated tax. People can't understand it, but yeah, you're spot on. Like, a lot of good happens in, you know, these businesses. I think you'll find small business and family business actually employs more of the economy than what big business does. So
Yeah.
so the real heroes of the economy are probably the mums and dads that risk it all every day to open the local chicken shop or whatnot. And yeah, they do it. They probably do it a lot tougher. But then they get slugged with the 5% tax as well.
Yeah.
It's not great, mate.
Yeah, no, it always adds up, and it probably will continue to do so. I imagine there'll be something new in the future. But so I think you may have previously quickly mentioned there, like, you know, companies, especially online ones, going offshore with where they're basing their companies. How are people getting, you know, I think it's Apple and LinkedIn, like a lot of these big companies based in a place like Ireland because they got 15% corporate tax. To what extent does a company have to, like, how much do they have to be based there versus Australia to get away with doing something like that? Is it a pretty hard thing to do?
It's more technical than my knowledge, but I'll say it's a hard thing to do. They've recently cracked down on it, so a lot more of that tax is getting paid in the right countries.
Yeah.
You know, it's been a thing around the world. It's definitely not something that the everyday business can do. Like, we'll get it all the time. People saying, "I'm just going to go open my company overseas." Like, the way the tax system works in Australia and most places is you're taxed in the country that you're a resident of. If you ever want to get the money back here, you're going to pay tax on that money. Unless you're willing to move your whole life to go live into one of those countries, you're paying Australia tax.
Yep.
So, you know, and most people aren't willing to move their whole life. They just want the tax.
Yep.
It is complicated, like, and it is getting cracked down on. The world's getting smaller. The world's getting smaller and smaller. The systems are getting better and better. All those gaps in the international tax will continue to close. The big companies will still find ways to, you know, keep that tax down.
Yeah.
But that and pay as little as possible. And they got the money to fight the ATO. They got the money to delay a case. But, you know, not all of us are there. I often tell people, mate, is like, we're talking about tax a lot here, so I'll say this here, is like, don't let tax distract you from what you're actually trying to achieve. Like, tax is a big topic because, like I said before, you pay a lot of it. But some of these tax you just can't avoid. Like, you can't avoid GST as an example. The money comes in, the money goes out. It's very hard to, call it manipulate, for want of a better word, that GST bill. Accepting what your taxes are and understanding how the system works and building your business model around those taxes and that system is going to be hugely more beneficial than looking to save 2% in tax and 3% in tax from trying to do some dodgy thing that just distracts you from the overarching strategy of what you're building. That doesn't mean, don't hear that as go pay more of the tax than you should.
Give them more. Why not?
It's not at all what I'm saying. I'm saying specifically, don't let it distract you from the core business and the goals of what you're trying to achieve. Get the structure right, get the advice, get it set up at once, understand it properly, and go to work at building the business.
So should more people then be because of some of those taxes or to the extent of the tax isn't as prevalent early days, people should be, when they're structuring their pricing of their product or their service, should be being like, hey, this is where I want to be. Like, let's say my business, I want to be doing $1 million a year. What tax is that going to come with? And therefore I need to adjust my pricing from day one so that it doesn't bite me on the ass at day 365.
Would love for people to do that. Like, and 100% they should. Like, pricing is an amazing conversation. Like, we talk about brand and pricing for years, but yeah, like if you're building a business model out, build the business model out for the end state, not the start state, basically.
Yeah.
And yeah, a lot of people don't. A lot of people, as you rightly said, build for today's cost base, which is completely irrelevant. And then they lose the customers anyway. So the customers I signed originally when I first opened the accounting office, because I was young, dumb, and silly, were paying me $80 to drive 4 hours to do their individual tax return because I just needed money. And those customers aren't here anymore because they can't pay what it costs to keep this office open, which is fine. They'll find the right person for them. But, I should have spent more time thinking about who's the customer I actually want to work with and building a business for them versus just getting getting a dollar through the door, essentially.
Yeah. So how do you then, pricing, positioning is a word you use there as well. Like obviously, you look at say different brands. Like I think you've talked about maybe Kmart versus Louis Vuitton. They both sell clothes, but you can't. Wanting to be on, you want to either be on the premium or the cheap. You don't want to find yourself in between. What's the reasoning behind why you want to be the Louis Vuitton or the Kmart, not someone in between?
Well, give me a brand that you think's in between.
Whoa, that's a tough one. I guess there's
why,
probably not much, is there? Yeah,
that's the point. Yeah. You don't survive. But no one exists in between.
Yeah.
So the reason why you don't want to be in between is you're irrelevant. No one cares about you. You're either a brand that is premium and people will line up out the front door to be a part of, or you're the cheapest brand that people will go to as a commodity to get the thing they need fast. Anything in between, like, no one cares. Like, no one's patting me on the back for my... I can't even think of a brand. What was it? Like, you remember Mambo or something? You'd be
yeah.
Like,
as a kid I had that. Yeah.
Yeah, there you go. Like, there's no one patting you on the back for these random brands that no one cares about.
I guess so. That you're talking a good example there might be the brands that you see come and go within a Target that are not Target, are not Kmart, are kind of the brands that just don't survive.
That's it. Literally, it's like a nothing brand that no one cares about. There's no love for. Whereas if you wear a Supreme T-shirt and people will notice you wearing a Supreme T-shirt and potentially ask about that. There's a lot of stuff that sits in between that disappears very fast.
Yeah, it's pretty funny because like plain white t-shirt, $25 from Uniqlo or something like that. I'm like, this has me covered. Like, is that because then like people, so they either go for the Louis Vuitton or something like that because of the status, the ego, all these other things, and how it makes them feel versus then the person that doesn't want that out of the item simply just wants it at its basic form at the cheapest price that does the job.
That's it. You're either selling me ego or you're selling me function.
Yeah.
There's not huge amounts in between.
So is that then? So you go.
Yeah, we're talking obviously product-based business, not service-based business, but it's similar in the service side. Like you're either giving me high quality service, high quality like offering delivery, or cheap, fast, and nasty. But I can't tell you I want to have 24-hour turnaround time. I want to have proactive advice. I want you to know my business like I know my business, but then also tell you I want to pay the cheapest rate possible for the services. Like they don't work.
Things come at a cost, and it's but then I guess in terms of modern world, we've got technology and things like that. Maybe kind of allowing the gap to come together, maybe in like from a service-based thing. Tech products and things like that, but they still don't have the status attached, despite being cheaper and closing the gap. Like I used the example the other week with someone else of, a Toyota Corolla versus, Mercedes C63 AMG. The technology and the fact that it gets you from A to B, the Apple CarPlay, Android Auto, all the bloody same.
Yeah.
But it's the status.
So
then, in the modern world. Yeah,
that's brand. That brand will always exist. And in the service side, I think, like, at least I know for our guys, the better we get at technology, the faster we're able to do the basic tasks of our job. We don't look at that as like, oh yeah, we can reduce the cost. We look at that as we've just bought more time to deliver more value. So it's like, instead of me sending you your management report of how the business is performing, I've now got time to call you and run you through it and talk to you about what's going on. So in my head, the better technology plays out at getting rid of cost and time, it just buys me more opportunity to create better value for the people I work with.
Yeah, which obviously is a massive point of topic at the moment with things like artificial intelligence obviously on a massive rise, and you know, like you said, I'm too young to know when the internet first came to life, but like I've heard too many stories, and I'm like, I'm not going to be that fucking guy that sits here and is kind of like, no, like
it's not as much as it's a fad.
it's bullshit, it'll disappear. It's like, no, as much, that doesn't mean we can't have concerns, you know, like it's you know, but at the end of the day, if you don't adapt and go along with these trends, you get left behind. And so if someone like yourself is using these technologies, then you might 10x your productivity in comparison to someone that just sticks with what they have now.
Yeah, like there's no way we build the firm we have today without the internet. Like, you know, the accounting firm couldn't get think about, like we send out something like 800 BASs a quarter.
Yeah.
Rough number. How would I have done that without DocuSign? And without email? Every one of them would have had to get posted out or driven to someone's house, wait for someone to sign it, try and get it back, then post it to the ATO, wait for it to get lodged. Like, I can't even get people to click 2 orange buttons to sign the DocuSign half the time. Like, the idea that you had to go through these steps to do anything is crazy. So, so technology used properly allows us to obviously grow a lot bigger and do a lot of different things. But again, it's like, you know, and AI will be the same. I'm sure there's going to be a million things that we take from it that help us develop and grow the business. I've got to constantly, like, when I talk about it in front of the team and just people in general, like, always I'm like really careful, like, to keep telling them, like, don't look at any of this stuff as stuff that's going to kill your job. I don't know if it will or won't in 10, 20 years. Like, I don't know the future. But the way I look at it personally is like, if I can find things that it's never going to take away human interaction. It's never going to take away the relationship I can create with people and these guys can create with people. The more we can take away of the stuff we hate doing, the more time we get to spend stuff we love doing. No one signed up to their accounting course to download BAS statements and look for the bookkeepers miscoding in the GST. Like, no one wanted to do these things. We love business. We care about business. We want to talk about business. Go sit at the client's house and talk about their business and don't worry about doing that coding because the AI can do it. Happy. Yeah,
exactly. Yeah, I think it's about, like, especially the time frame we're at now. Like you said, we really don't know. It's moving so fast. You know, seeing some of the stuff that like OpenAI has now brought out, just with, like, say a text to video, and how that in 12 months has changed. But at the end of the day, like, it's right now. Let's try and use this as a tool that amplifies the person in front of you. Like, it's you know, or the person you are, and try and upgrade yourself. But like you said, like, there's a lot of wasted, you know, mental calories, mental burn on, you know, putting out fire tasks, the fucking boring, tedious, like, go through your bank account, this was an expense, and do all these sort of things, or whatever it is. We can start to eliminate a lot of those things, and now you innovate more, and you know, that to the point of, say, like an Elon Musk, they have, the whole team has, you know, if you have, you know, 1,000 staff that are now being creative, not just doing tedious tasks, that's powerful.
It'll move the dial. I think there's a couple of things that, like, BK, our CEO, kind of said to me once. He's like, how much of an uproar do you think there was in the accounting industry when they went from pen and paper to computer?
Oh, it would have been nuts.
It would have been nuts. Like, we're not going to have a job. We're going to lose that. Like, it would have been a similar story. And it would have been the same thing again when the internet and online banking started. Like, the world feels, but that's not what's happening. We're getting busier and busier because people lean on us more and more. If you think about it kind of like personal training, it's like, do you know how to lose weight and stay fit? Why does anyone pay for a personal trainer? Yeah,
exactly.
It's not lack of knowledge. It's not because they don't know what to do. It's because we need more than just the information and the knowledge and the point in the right direction. We want someone to push us. We want that guidance. We want that human piece.
Yeah, I'm glad they do, because that's my day job. So that's a good thing that they do. Yeah. So, but yeah, it's 100% true. But that's also to your point of, like, the scale, like we were talking about before, of the differences in the different products. There's people that require different things, and there are different, you know, time along their journey. You know, and so for someone that needs the full accountability of someone in person, you know, to the other person that just needs a little bit of accountability by checking into an app or something like that.
Happy days. Yeah.
You know, but there's a product and a service out there for any business owner to start, and for anyone to use as well.
Exactly right. And there's a lot of people out there too.
Yeah. Well, that's it. And now we have the access to reach them, and, you know, AI will probably start to make us be able to reach people in other countries without having to learn a new language. So
literally,
you start to see all these other things come as well. So I wanted to then, you know, back to, you know, the pricing sort of thing. And then, looking at margins in these obviously different industries or different, if you're a bricks and mortar, restaurant versus a tech product, that, your margins and things you're aiming for are going to be slightly different. As a bit of a general overview, what are some targets within some different types of businesses?
Yeah. I'll give you the most general comment I can give you is the more margin, the better. So
that's more money.
The more money. So
Yeah.
Your margin is your rocket fuel to grow and drive your business. So we'll kind of start there as a business owner, you should be thinking about your margin as like, what price can I price things at that people will pay? How much brand do I need to build? What do I need to do to create margin that gives me enough fuel to spend on marketing, to hire better people to do great stuff with? So your headspace, generally speaking, should be more margin, the better. But then you have someone like, Amazon, like Jeff Bezos, who comes along and he's like, your margin's my opportunity. So he's sitting there pricing low to take your customer to take that into his ecosystem because they got so much going on. So your margin can only go so high before a competitor comes in and starts to try and take that customer away. So you got that balancing act. If you start to jump into industries and you think about, if you're making your own product, as an example, like if I'm a retail, an e-commerce kind of clothing brand, I want to have like 25% cost of goods. The cost of my t-shirt in China should cost me, 25% of what I sell it for.
Yep.
So I'm selling it for $100. I bought that t-shirt for $25. My shipping cost probably cost me $15.
Yeah.
And then my merchant fees and maybe, discounts or bits and pieces might be that last 5%. I'm generally making a 50% gross profit margin. I want to be making 50% or more gross profit margin to have enough money left over to spend on marketing and people and have some profit left for all the effort that I go into in driving this business. So you're kind of looking at 50% there. If I think about like hospitality, you sell $100 worth of food. You've probably got $35 of food costs that go into that, 35%, give or take. You've probably got another 35% going into labor costs, as in the people making and serving the food. And then you've probably got, 10-ish% of rent. So you've already lost kind of 80%.
It's not much there.
There's not much left, mate. Yeah. And then you got 5% of a bunch of other stuff, marketing, whatever. But like hospitality for me is one of the hardest businesses, mate. Like they work, long hours. They've got to manage food, prepare food, a lot of people. And as a customer, people often complain that food's expensive everywhere. And it's like, mate, like I can tell you from the numbers, none of them are making money. So, not making enough money for the effort anyway, for a lot of the time. So, food's a tough one in my opinion. Professional services, normally running at like a, 30 to 40%, say 40% labor cost to what the services they provide for the most part. So, that's lawyers, accountants, recruiters, those kind of things, physios, etc., personal trainers. normally they run somewhere around 40% as a kind of cost of labor to their sale price. And then they've got their overheads after that to get to a profit of like 25 or 30%. The difference between like a service-based business and a product-based business and kind of hospitality as well is scalability. So your personal training business, the reason why you need to make a 30% kind of plus margin is you can only train so many people. Yeah. And it's really hard to train trainers to train other people for you to make margin on top of them. So it's really hard to scale your business, which means you need to make enough margin that it makes worth building your business, worth it. Yeah. Whereas like a product business, I can sell 100 t-shirts today and 1 million t-shirts tomorrow if I've got enough customers and t-shirts to sell without having it, and it kind of drops to bottom line profit. So there's a lot more scale in some of these other businesses than what there are in services. So you expect to see a bit more margin, the harder it is to grow it.
So it's kind of like you're building a product that's kind of the one-to-many versus the one-to-one sort of thing as well. Like that's the kind of key of what scale is capable, what you're capable of when it comes to scaling as well. If you're making something once and then you can just put a shit ton of money into marketing, you can send that thing across the world. Whereas if you sit down, you're a physio, you're hands on. Well, that's you got 10 hours, you got 10 clients.
That's it. And you can train another physio, but I can tell you from building an accounting firm, it's really hard to hire, find, train, inspire people get them to start operating the systems you want to operate in. Then you have to go through the change management because you want to change the system, and then someone resigns and you start again. It's really hard. It's not an easy thing to build a professional service business. What you find with most people, and this is true for tradies and things like that as well, is they'll start building their business. They'll hire their first 2-3 people. Then someone will leave and someone will be, probably not up to scratch. Yeah. And then they'll kind of look at it and go, this is all too hard. And they always end up scaling back to just themselves and one person. Yeah. Like that pattern we often see repeats itself. And they blame the people. You'll often hear like, it's so hard to find good people. Everyone's shit. No one can do what I can do. That kind of commentary. Often it's the person doing it has never been trained in the operation of a business. They've never been taught how to recruit and train good people. Have you read E-Myth by any chance?
No, I haven't. No.
So it's a book essentially about the difference between being the technician versus the entrepreneur.
Yep.
So the guy that starts the accounting firm often was the accountant, and then he slowly over time becomes the accounting firm owner, but doesn't actually know how to be a business owner. Just knows how to be the accountant. Yeah. So that's what's true for carpenters, hairdressers, accountants, lawyers, personal trainers. Like most people take that trajectory, and so they'll often tell you that they can't find good people. People are shit, things like that. But the reality is they've never been trained in the things that it takes to build and grow people.
Yeah. So I think, and I've heard this from yourself and from others actually as well before, is like, look in the mirror before you decide to look through the window.
That's
like
it's
maybe, yeah. And this is not just to be like, damn, I look good. This is to be like, hey, maybe I could look a little bit better.
That's it. It's funny. The boys here laugh at me. They have like quotes from quotes I say that they just bag me out with.
Yeah.
But yeah, look in the mirror, not out the window is a big one.
Yeah. Yeah, and I think it's definitely massively common, in a trades business as well. Like it's, not to knock trades, but a lot of those guys, maybe dropped out of school, 16, 17 years old. So, the education from that point of view maybe isn't foolproof either. And, then they're on the tools, and then 6-8 years later, after being on the tools for a while, they're like, fuck this, I want to earn more money. Yep. And they start a business. And they're like, I don't know what to do. Like, this is weird. I used to just get paid.
It's literally what happens. And like I was saying this before, like their journey when they leave school and start as a trade is this, they just get abused. Yeah. Like those first 2 years as an apprentice is just you being the shit kicker and you getting abused by everyone else on the job site.
Yeah.
And so like, and then you expect that same person to be an inspirational leader in 10 years. It's like,
the cycle just repeats itself.
And it's funny, man. Like people will often say, like clients will often say when I try and like talk to someone, let's say a plumber or something like that, and say, hey, no, you need to meet with your people every month. You need to do X, Y, and Z. It's like, oh, you don't understand how people are different. Plumbers are different. And I'm like, they are, but people are still people. Like, and I can guarantee you meeting with your people every month and trying to build them up and like encourage them or whatever is going to move the dial more than not doing that.
Yeah.
And like, they're just stuck in this mindset often that it is how it is and it can't change any other way. It kills me.
Yeah, but it's that old school kind of, no, just work harder sort of mentality, and not seeing like they see, well, that time I have to put into someone to sit down, to have the coffee, to whatever it is, that's the time they could be on the tools making me money. And so they, but then that's obviously a massive bottleneck for where they're going to go to as well.
Yeah, like we're very short-term thinkers around that kind of stuff. And I'm not suggesting that we should let everyone not like, the other part of what they don't do is understand the metrics of their business and how that time matters and getting into detail on how they actually make their money. So they wouldn't even think about half the time about how that impacts.
Yeah.
But yeah, like there's definitely a lot more value in the idea that your business is your business growth and your profit growth is your ability to train plumbers, not your ability to be a plumber.
A point that you've made: revenue is vanity, profit is sanity, and cash is reality. What do you mean by that?
So nothing else matters except cash. If there's not cash in the bank account, then can't run the business. Often people will chase revenue as their first kind of piece. Like, I'm going to go make sales, and we beat our chest and tell everyone about all the sales we make.
Yeah.
But those sales mean nothing if the cash doesn't follow. And then the profit piece plays into it. Like if I make sales and I'm spending all the money on expenses, then yeah, there's no profit there anyway. Even if there is profit there and they don't get it back in cash, then it means nothing as well. So I think the point is cash over everything. So if you're thinking about how your business works and you're building out your business model, understand how your sales turn into cash. Professional services and business to business it's more probably relevant in that, I might sell you a tax return today. That doesn't mean I get paid today. The cash might follow tomorrow or the day after, depending on when you pay that invoice. So, like we're going through a process. We've got most of the business on direct debit, but we're going through a process now of putting the rest of the business on direct debit. So I don't need to think about when I get paid for the work that we do.
Yeah.
And then product-based businesses, like when we're talking about cash, if I'm sorry, I ate dinner while the computer.
No, you're fine.
Product-based business.
Got to do what you got to do.
Cash. Yeah, exactly. If I'm growing an e-commerce business, I make profit. Like I've sold $2 million worth of product. I'm doing really well. There's 500 grand profit left over in the bank account. But if I've used that whole 500 grand to grow the business, to buy the next range of product, to be able to sell more product, then the sale, beating my chest on the sales is irrelevant, because I could be broke the next day if the next product doesn't kind of sell through. So, people do just have to, like, when you start your business, you don't think this way at all. You just think about sales. Most people just think about sales, and they subsequently then start to think about profit. But everything has to be built with cash in mind. How's the cash flow happen?
Yep. So, you mentioned obviously there, like, so when the money hits, versus kind of when the service is being provided. If someone if you're, let's say, I hire a media agency or a marketing agency or something, and I pay them on the first, but the delivery, or maybe in one financial year and it carries over to the other. What part of that sale then would be taxable, I guess, on this P&L sheet versus the next year's P&L sheet? Is that how that works, or is it just the day
for the
off?
most part, it's based on, like, if you're doing proper accounting, it's based on invoice date. So most people are on the accrual accounting. The day you give me the invoice is when I claim the deduction for it, and the day you give me the invoice is when you pay tax on it. For a lot of people, some people are on a cash basis. That is, they pay and declare the tax based on when the cash moves hands. But proper accounting is based on invoiced basis. And I'd encourage people, like, if you're setting up your business and you're trying to build process and do things properly, set up your accounting function properly. Set up your invoicing process. Get your accounts payable working, where every time you get a bill, the invoice goes in the system. You record your expenses when you receive invoices, not when you pay those invoices, because it gets really kind of convoluted if you don't. Basically, your profit and loss is just, I made $1 million of sales. I decided not to pay anyone this month, so it looks like I made $1 million. If you don't actually put the invoices into the system, so if you can get the data and the process flowing, it's not too hard now with the way accounting software works. Going back to technology and using it properly. There was once upon a time when it was really hard to get all your data in the system properly. It's not the case now. So So
is that tools like Xero and things like that as well that you're doing this to streamline it?
100%. So Xero for 90% of people, Xero is enough. You don't need to actually think further than that for your accounting systems. When you start to do things like e-commerce as an example, and like you have to manage inventory, you probably want to get a specialized inventory management tool. If you're in hospitality, you probably want a special POS system for the hospitality. But for most people, the accounting system, Xero will do the job.
Then, obviously, so you've got this, let's say you've got this cash, you've done the right thing, cash is king, and you've got cash. Where is it a good idea to be holding some of that in an account in your company to ensure some safety net? How much should someone look at kind of holding? Obviously, it's going to be the phenomenal answer that we've always come up in business is it depends. But is there some form of kind of structure that you advise people on when it comes to keeping that cash versus then taking it and doing something with it?
Yeah, the more volatile business, so it depends on the volatility of the business. How secure is your revenue? I know that every quarter you have to do your BAS. My accounting revenue is pretty cyclical. If I run a hairdressing salon, I know that you have to get your hair done regularly. My revenue is pretty cyclical. if I run a real estate agency that's largely driven by the sales side of the business, I'm not so sure on the number of sales I'm going to make in the next quarter. So I probably want more of a buffer of cash.
Yep.
So my comfort around my budgeted sales and what's coming in the future will dictate how many months of cash I want to leave in the bank account. Like the life of a tradie, we've spoken about it a bit today, but the life of a tradie stresses me out. Often they finish a job and they're thinking about the next, like they don't know where their next month sales coming from. Like I couldn't live in that world. They need more cash buffer to cover a month where something doesn't come through, if that makes sense. But as a kind of guide, we're talking 3 to 6 months of, cash of your fixed expenses to run the business, or your expenses to run the business. Which means, the bigger the business, the more that cash is. But if you've got a good business that's got good working capital and good cash flow, by all means, pay it out faster or use it to invest. Not necessarily pay it out. It might be that you just decide that you're going to go open a new store or something with that money. But you don't have to keep it as a safety net. You can invest that or spend that.
Yep. So the 6 months is kind of a business that's a fairly volatile business.
Yeah. So if I'm a plumber and I've built up a team of 5 or 6 people and I've got an office and a warehouse and all that kind of stuff. Like I want to know that if shit hits the fans, I've got a few months of cash before I'm stressing.
Yeah.
What's difficult is going back to the story is like the discipline of the business owner just isn't there to save the cash. Often they burn through it. So it's really about getting disciplined people, taking disciplined action to know what that metrics are. Like there's books, there's Profit First as a book, which is a good example of something that can, train people on how to manage their cash to build up that buffer of money. But, if I told the plumber to go read that book, 9 times out of 10, he's going to tell me plumbers are different. They don't read books.
Yeah. No worries then. Keep losing money.
That's it. So, so like 6 months is more volatile. 3 months is less volatile. You could go less if you've got a really good, strong business, but you probably don't want to go too much less.
Yeah. So I guess then, touching on, we'll wrap up things here as well. You mentioned books. So are there some that people could be, or maybe other people like yourself or that are putting out content in the accounting business space that you kind of would advise people go down if they want to kind of dive a bit deeper on some of the things we've talked about today? And obviously the plethora of other bloody things in business, because there's plenty of them.
There's plenty. I'll give you some good ones. So we touched on E-Myth today. E-Myth is like the business owner that feels stuck, that can't work out why everything keeps landing on their shoulders and how they grow the business past themselves. E-Myth is probably the first book that most people should read to get the idea in their head of what it means to be a business owner. Good to Great is a cracker Jim Collins book. Jim Collins has about, fucking 10 books and they're all sensational, but Good to Great's, top of the list in that. You're probably a more mature business reading it and like, just again, thinking about leadership and the right people on the bus. That kind of things. You've already read E-Myth, you've implemented a lot of stuff. Go to Good to Great.
So is that kind of a book where you're going from when you had your 5 to 50 employees?
Correct.
Sort of thing?
Yeah, correct. Spot on. There's one I've read recently called Family Village Tribe, which is a Flight Centre book. And you know Flight Centre, obviously like the way they built their business and the story of building Flight Centre is cracker. So it's a really good book. It goes deep in how they do their remuneration structure and things like that. So cracker book. And then getting a bit more practical, like I guess things you can actually take in action. Traction or Rockefeller Habits give you a really good framework for how to business plan and drive your leadership team to focus on a 5-year plan and grow the business. That's probably get through those 5 books and then message.
I was going to say, then you come back for part 2 and by the time you've read those, maybe we'll have to have you back on. So that'll be good timing. But I appreciate that, Danny. That was really good. Lots of information. Like I said, I've walked away with a lot there that I know is very helpful for myself, which means that a lot of other people are going to find a lot of benefit as well. So, like I said, if you're, in need of a high quality accountants, then we'll leave any information of Danny's in the description below. Exactly. We'll try and boom the business, but I can't promise anything. But that's all right.
Appreciate the effort.
Thanks so much. Appreciate it. Excellent. Thanks, man.